you look at the last quarter they reported, it was really a revelation. This is a company that I think they have got 8 subsidiaries doing over $1 billion or more. I think it's the only company actually in the S&P 500 that can claim that. It's just extraordinary, kind of becoming a Berkshire of the digital age. The one overhang with this story right now is the transition from cookies, which is going to be a global thing, over to whatever the new de facto standard is for tracking users and selling data to marketers. And it's unclear that Alphabet or that Google has successfully figured that out. So I think that'll be an area that there are questions from the analysts, and that'll be something that I'll be listening for. But I can't imagine you'll see anything but continued strength from the cloud unit, from YouTube, from search in general. And as I've been talking about for a year and a half, Google has something that a lot of the FANGs don't, which is a reopening component. Most travel starts with a Google search, for example, and there's a lot of associated ad revenue for that. Travel is one of the biggest contributors to ad revenue for all of Google search properties. So I think we'll hear good things. I'm long. I think the stock is undervalued, and I think it has the ability to outperform most of the large cap Nasdaq names in 22. So fingers crossed. We'll see what happens.
Yeah, Steph, what are you looking for out of Alphabet? Josh mentions a good point in terms of the exposure to travel, but also it's been a bellwether in terms of its ad revenue and how that tracks.
Yeah, so I recently sold it. I had made tremendous money on it. Just last year alone, it was up over 60%. So I took my gains and I added to Facebook. So Facebook is my largest FANG name. And I actually only own two FANGs at this point, Apple and Facebook. But on Alphabet, I think it's going to be fine. I mean, I really do. I think it's going to be strong. And I think they will see momentum in ads for sure. Travel's about 15% of search. So it's meaningful, as Josh mentioned. But I do wonder how they're going to focus on OPEX expenses in general. That had been a problem for the company for many, many years, that they overspent to grow, by the way. And it's actually reaped a lot of rewards since then. But I wonder if you're going to get that operating leverage like you've seen over the last several quarters. And of course, we're all watching cloud, right? And the momentum that they're doing within cloud. We know that Microsoft had a very good number from Azure, and they're talking about acceleration. So let's hear their commentary there. Great story, great company. I just prefer other FANGs.